Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Thursday to you and your family. Hope you're having an amazing day. And obviously, taking a look here at Bitcoin, seeing what's going on again. We dipped down, jumped up, dipped down. We're still making lower lows and lower highs, at least on the daily, of course. But when we look at smaller time frames, there's some other stuff we want to kind of look at and focus on. Traditional markets are down on the day, so it makes sense for Bitcoin to be correcting itself. But it was correcting itself yesterday in anticipation of the FOMC minutes. So even though it was 0.25 basis points, it really wasn't as significant as it could have been. But the price is coming down, and that tells us a lot about the fact that we have an overextension on the price action and that we shouldn't expect the price to rally up anytime soon, but also potentially to see a little bit further correction. So we'll talk about that and much more. Obviously, if you're new to the channel, keep in mind I'm not a financial advisor. I just love teaching people how to trade. I've been trading and teaching for over 17 years. If you want to become a better trader, come here to cryptocash.tech and feel free to register. We've got a free trial period for our signals where you can kind of see the trades that I send out and kind of the setup that I have, as well as, of course, our Discord community too. That's all kind of part of it. And we got some amazing traders over here too as well. They're just fantastic. Super good traders. Take a look at some of these results here recently. We've got 47% Ethereum and 78% short from OP for Alexandria. He is a Bollinger Band fanatic. And in fact, I'm working on some indicators we're going to have available too. My CC Gold indicator, possibly even a Bollinger Band indicator, where they're going to be available through the site. But for now, as you can see, tremendous amount of benefit my community members are seeing by grouping together and working together on a common goal to become better traders, right? So again, there's that. There's also signals, of course, as well that I send out where you can see some of our recent profits here, about 17% for Bitcoin in 9 hours. And prior to that, Chili's in, what is that, about 29%. Keep in mind, this is 20x leverage that we're using for our long positions. We usually use 10x leverage for shorts. Again, different situations for everyone else, but for the most part, awesome stuff there. And one last thing here, congrats to my community members that just benefited from a $4,000 prize pool. They got a nice, healthy little benefit there through BitGet. So use my link in the description below. You'll qualify for any future competitions. We do that pretty much monthly. Same thing as well for Bybit. We're coming up on this as well. We're going to do some competitions soon here. Significant deposit rewards. Make sure you check that out. And obviously, MEXC Global, if you're in the US and you don't want to use a VPN, this might be the best exchange for you. Check it out. I recently partnered with them mainly because it benefits my community. And that's what this is all about, right? We're all working together towards a common goal to become better traders and to be more self-sufficient. I can tell you this is a wonderful lifestyle to be able to do this intermittently throughout the day and to not have a day job. This is my day job. And it's really cool to be able to share that with my community and see some of my traders grow to become very self-sufficient. It's a really awesome situation. Anyways, talking about the charts here, what we want to look at is a couple of key things. First of all, we've got a couple of candle wicks down here to the support level here at about 23,600 or 23,650 to be precise. That is a previous resistance zone. So good chance that we're going to see some further support here, and it might be a bouncing point. I like to emphasize the word might because we don't truly know if the price could continue lower or not. A lot of, again, traditional markets, we take a look here, just say at NASDAQ, for example. Even though it's testing this level, it's currently underneath this current support level at 12,100. So while that's not a big deal for Bitcoin, it still kind of is because there is a similarity and a lot of times a correlation between a decrease or an increase from traditional markets. So we're down 1.5%, coincidentally. NASDAQ is just under 0.5%. So again, those things do tend to factor in. Once more, not super important, but important enough to recognize and just kind of see it. Because again, when you're trading, you want to take a lot of different things into consideration. You don't just look at one time frame and one indicator and go for gold, right? It doesn't work that way. It's a lot of little things, complementing factors, things that can potentially add or take away from what you're trying to do. All right, so we've already established that we've got a resistance level between 25 and 26,000, okay? So just kind of throw that out there, reiterate, the monthly and the weekly are looking, I wouldn't say bearish, but they have resistance zones in that area, okay? That being said, on the daily here, we've got a different narrative essentially where we can see the RSI keep getting rejected here, as well as the price got rejected there. That's kind of an RSI bearish divergence where you can see the price action coming up and then the RSI coming back down. There's potential to bounce here, of course, but for the most part, we should expect the price to continue a little bit lower, right? Same thing here as well with the MACD divergence. It's pushing down, so to speak, and we're soon to have that divergence. There could be a bouncing point there. Once again, it is very common for the MACD to bounce, essentially, and for them to not necessarily converge. That's why you want to wait for confirmation, or in this case, it would be a divergence. Wait for confirmation. See, we're still a little premature here. I would say tomorrow would probably tell us a lot more than today based on that sentiment. Okay. Furthermore, too, we're coming closer to 50, so we could really see that bounce off 50 and the price come up from here. It would make sense that we're going to get that just based on the simple fact that we have a strong support area here. The price has wicked down there twice and had no luck to get down lower. But once again, the more often you test for support or resistance, the more likely it is to break. So we kind of got some contrary scenarios here, but bottom line, we're above the 50, the 200, and the 20-day moving average. These are three important things on the daily to me. So as long as we maintain a price point above the 20 at the very least, just say the price wicks down to 23,100, heaven forbid, the price could and likely should still hold that zone. All right. Again, handful of reasons to possibly consider long positions here, but I would recommend if you're going to do a long, make sure you have multiple entry targets and do not go all in at this current price point. Something I love doing personally is just taking multiple targets on the way down. Now, here's the thing. On the 4-hour time frame, we got to see here and recognize we're under the 50 and the 20. Okay, so that's not ideal. So the 4 hours kind of giving some bearish signs here. The 200-day moving average, of course, the price could come down and bounce. That would be ideal. That is concurrent with the 20-day moving average at this point on the daily. It's positive when those things do kind of correlate. So for lack of better terms, I do think 23,100 as a rough estimate would be a good holding spot if the price were to break down further. We got to recognize we are making lower highs and parallel, for the most part, lows. That kind of tells us that we're working ourselves into a wedge pattern. And a lot of times when you go into a wedge, the price will usually break to the upside. But again, based on everything we've seen here so far, we probably want to wait for confirmation before you take entry. Again, if you're going to take entry, small position size and multiple entry targets. That's the recommended scenario for the situation right now. Until we break bullish, we really need to be strategic in our positioning, if you will. And those are things I'm building into a trading bot as moving forward. I'm going to start offering that through my website, of course, and it's going to be able to fully automate through an API. You can connect to whatever exchange you want. We're working on that. We're probably a few months out from it, but the concept is to apply the strategy that I have to a scenario like that, and I feel like it's going to work very well. A lot of the data that we have so far kind of tells us we're heading in the right direction. So excited to provide that too. We're going to get more concrete stuff. So you have some indicators and preferably a trading bot to work for you on your exchange of your choice, right? But in the meantime, again, still bearish here. We can see we're kind of going parallel here with the MACD, effectively just telling us that we don't have a tremendous amount of momentum to the upside or downside. While it is still diverging, we're still not picking up the momentum. So it's a good sign in a sense. The price can hold this. If we can close above 23,600 today, it's going to be a positive sign. We may be able to come up here and establish higher highs and higher lows. Again, it's a big maybe right now because the 4 hour is not telling us that we have great signs for the moment. Okay, so the daily looks slightly positive. 4 hour looks slightly negative because we're below 50 on the RSI again. And we haven't been there for some time, but as you can see, when we go below 50 on the RSI, we stay below for some time, okay? So for the most part, it tends to be a trend. And trends have a tendency of repeating themselves until they don't, okay? So we're under 50 on the RSI. We should expect the price to stay under 50 on the RSI for some time until it breaks back above, right? So to me, the 4 hour being kind of the transitionary time frame, I think it's important to recognize that we're still mostly bearish here, even though we're holding the support sign or support level, and it's a good sign. The more often you test the support, the more likely it is to break. So I'd be very surprised if the price holds here and recovers. I think it would make more sense for the price to come down a little bit further before it does. Or before returns, if you will. Quick note here, we did come down to a 9 on the 4 hour for TD sequential, telling us we had a full 36 hours continuation, had a little 12 hour rally, and then of course right back down for another 12. So in truth, there's a lot of resistance here at this zone here, where the price action couldn't break past 24,500. So 24.5 could be the new resistance level. We can start drawing out some new Fibonacci retracement levels here soon, but for the moment we'll go ahead and leave them where they're at because they're still relevant. But generally speaking, it's important to kind of reiterate and kind of redefine that. So we came down to a 9 here. We got pushed and rejected, and we're still on our way down. So in truth here at this point, while this little push up here was positive, it was completely erased when pre-market hours opened this morning. So you can see a nice strong correction here when pre-market opened this morning. And if you're ever interested in kind of paying attention to pre-market hours and traditional markets, you'll see a very good correlation there where there's a significant sell-off before the market opens. And that's pre-market. You have a few hours before the market opens in traditional markets here in the US, of course. And of course, there's post-market hours too, but those things all kind of correlate together in the sense that that there are usually big movements in those time frames because there's less volatility. Not everyone can trade those hours, right? Or not everyone wants to. Anyways, enough about that. That does communicate here somewhat indirectly, but regardless of that fact, it does feel like we have a little bit more downside here, potential for Bitcoin. As much as I would like to buy this dip, if I'm going to make sure to add multiple entry targets and only put maybe 25% of my position size into this trade if I were to take one, right? Again, I like to wait for confirmation. Let's go ahead and see what the cloud tells us. This to me is one of the better indicators to kind of understand where you're at. So for the moment here, I know it seems kind of messy. We could kind of honestly just remove the lagging span and the conversion baseline so you can kind of see what's going on here. So first of all, if you can see the cloud, it's pretty obvious. You can see the price got rejected here right at the cloud. So that's basically a series of moving averages where we have a divergence. Of course, the price comes down, gets rejected by the cloud. So based on us being underneath the cloud, it's considered a bearish sign, right? So generally speaking, at this point, we are bearish on Bitcoin for the moment. Okay, so if you go ahead and you put some of these indicators back on here, you can see the conversion line is below the baseline. That tells us we have a divergence of sorts where the price action is going to come down lower. Okay, so we add those two things together, the likelihood of the price action continuing lower is higher. Okay, it gives us an identification that we're moving down. Okay. Furthermore, we can also see as well the lagging span is intersecting with the price action. So if you have a short position open, you may want to consider closing it. So while this all seems kind of contradictory, it's beneficial in the understanding of the sense that we have 2 out of 3 indications telling us that a short position might be viable to keep open, but you should probably take some profits if you haven't already to the downside, based on the simple fact that it could bounce moving forward. Okay, so until we close above that cloud, we're not going to have any kind of confirmation that we are bullish, and that to me is an important thing to recognize. Okay, so the cloud is important in that sense, just kind of giving us a conservative indication of where we're at, and I personally think that at this point here, we are transitioning to a potential bounce, but we're not there yet and we don't have confirmation. I'd like to see a closure above 24,000 today. That'd be a good start. Preferably 24.3 or higher, but again, we can't always get what we want. That's trading for you, right? You never get what you want. Rarely you do, and when you do, you gotta enjoy it while you can, because honestly, there's not a tremendous amount of opportunities, or actually, correction, there's a lot of opportunity, but it's hard to capitalize on every one of them. So try not to buy into the fear of missing out and just getting super greedy. You want to try to find the middle. Get confirmation when the price is heading the way that you want. Get out before it gets where it needs to, where you think it should go. Because yes, you're going to miss out on some profit, but you'll be profitable if you're taking profits. It's funny, we have this joke in our community that you'll never be profitable if you don't take profits, right? So it's kind of a redundancy, but it's very true. So try not to get super greedy. Yes, you could hold on for dear life for years and be successful, but if you're going to be trading, intraday or weekly, you may want to consider taking profits in certain scenarios, right? It's just important. Either way, enough said. I teach all that in my trading community, academy, and Signal group. Link down below if you want to become a member of that. Once again, we do have a free week trial if you want to check that out. Otherwise, I hope you have a great rest of your day. We'll look forward to seeing the next one. Take care now. Bye.